Welcome to ShortView Trading. It's your morning market here for Monday 21st of June. What matters today and this week for traders? Well, markets remain fascinating as always, and indeed coming into last week ahead of the Fed, it was quite clear that markets were very complacently priced. There are a whole number of ways of showing that and demonstrating that. One of them being, for example, if you looked in the corporate credit market and something like US high yield spreads, which were priced very tightly over US Treasuries, trading just over 300 basis points wide, one of their tightest really since the financial crisis. Other means of showing it included the equity volatility curve and a whole number and host of other indicators that we've been flagging up over the course of recent weeks. So markets were complacently priced at the start of the last week, and the Fed then acted as the trigger. Indeed, as Harry was describing on Friday, the Fed tapered or indicated that it was about to start tapering. It changed its tone. It was more hawkish. You could see that in a whole manner of bits and pieces of the language and movements in the dot plot, and indeed movements in their inflation forecast for this year. So the Fed changed the landscape, changed the mantra, started to have a bit of a more hawkish tilt, and that's been playing out in asset prices ever since, with classic key liquidity indicators down and the dollar up, all of which, and equities down of course, and the movement within bond yields with real bond yields up and implied inflation down, all of that of course speaking about the forthcoming tightening of liquidity environment as taper will begin sometime in the next few months. And with further weakness in markets on Friday and overnight in the Asian trading session, the key question is where to now on these equity markets? And of course, our first key input on that is what's been happening in our short-term market timing models, the models we use for the 1 to 2 week equity index futures recommendations. And as you can see in front of you now, the key risk appetite short-term scoring system, having been on sell earlier this month, is actually just reaching its buy levels, just touching that buy threshold and turning buy overnight. Equally, if you look at the short-term technical scoring system, similar sort of message, albeit it drifted for a few weeks, it's now back on buy just about. And indeed, a whole host of models are giving that sort of buy message and starting to move that way. So we've been short over recent trading sessions, and clearly there's a case for at least reducing the size of that short position. So the key question now becomes, when is it time to start moving long? Because it's clear the Fed has changed the landscape, but equally models are starting to move on to buy. So to see how we're playing this, please see today's Daily Rag available to subscribers via the website. Or if you're interested in a free trial, please click on the link below and sign up with your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. Or equally, if you like what you see, please subscribe. It's $50 a month, cancelable at any time with nothing further to pay. So what are we watching this week? Well, there's a whole host of things going on. A lot of Fed speakers hitting the stumps after the Fed meeting last week to explain their position. Most importantly, Jerome Powell up in front of Congress on Tuesday. Christine Lagarde's giving a whole bunch of speeches this week, Monday and Friday, ahead of various different constituencies. Added to that, it's the flash PMIs from across the globe on Wednesday. They're always important, the first take on the beginning of June's economic activity. Whilst in the UK, we have the Bank of England meeting on Thursday, with another decision expected on monetary policy, albeit no change is expected. It'll be interesting to see how many dissenters there are of the bond buying programme after Andy Haldane dissented last month. And then elsewhere, there's various pieces of macro data, including durable goods orders out of the States, personal income and spending on Friday, and some housing data. So that's it from us. That's your morning market hit for Monday, 21st of June. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading. Click on the subscribe button and follow these free videos. Or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.